Hey, welcome everyone. Tom here, Park Avenue Trading, your chief dealer, going to give you a lesson in trend-based fib extension. And this is a tool that you can find in TradingView. And I had some questions from client, student about how to use this. And he hasn't gotten to the point of like study yet. Well, actually, he has been introduced to it before I did this video on really certain trend like factors or ratios that you can use to help determine where you are inside a trend. Basically when you go to look up like how to use this tool, right? They say identify the trend. And for some people that's quite difficult, especially if you're new. So of course, if you're looking at whether a trend is up or down, it's a series of higher highs and higher lows for an uptrend and lower highs and lower lows for a downtrend, right? But so if I took this, let's go to a daily chart. Okay, yeah, this is a daily chart right here on Euro Australia, and it's something I don't trade really. So if we're looking at this marketplace, you got a high, you got a low, you got a lower high, you got a deeper low. This is the break point, right? Right here would be the break point of the marketplace, saying that if we break this, we should be heading lower. So the leg of the downward movement should continue. So marketplace does break it and then reverses back up. I mean, it doesn't go much lower than this, right? So if you were just using trend-based analysis, you got like 160 the figure against 161.25 breakdown. So it's 75 points really, right? So 125 points really, right? So really not much to the movement down. So if you were just following basic trend-based analysis off the dailies, where the hell is your stop? Well, you could say, well, my stop would be on a break of that. That's basically what I would call the ice line. Okay, well, guess what? That's a 300 point stop. Okay, so not too useful. So if we were going to use the trend-based tool on this, just continuing with this daily example, well, we could say you got a high, you got a low, you got a lower high, right? Because we need 3 points for it. So you got a high, you got the movement against the trend, and you got the lower high right there. This gives you your trend-based fib extension tool off of this leg of the move. So we can actually take this and extend it out. Well, if you were saying this is a downward trend, right, and you broke this point, well, you're looking for it to come down to the 1.382, at least close to the 1.382. And it doesn't. It basically reverses back up and goes higher. So how can we make this tool better? What can we do to help make this tool better? Well, it comes down to the ratios. So if you're using the tool, like the instructions, like he gave me the instructions on it, says like click on a starting point of the trend, usually a significant swing low for a bullish trend or a significant swing high for a bearish trend. So then he wrote to me, well, which point? And he sent me a picture of a chart. Okay, so it was confusing to him. Second, click on the ending point of the trend, which would be the next significant swing high, bullish, or swing low, bearish. And then third point, click on the point where the price reduced against the trend. This could be a local high in a downward trend or a local low in an upward trend. So really, the instructions for the tool are nebulous at best. And not only that, then it says choosing the correct starting point and ending point is critical to get the true meaning of, or the true meaningful Fibonacci extension levels. Oh, okay, that's great, right? So let's go to a 4-hour chart and let's tackle this together. Okay. Well, using the same points off of the daily, all right? We got a high, we got a low, lower high, lower low. So the break point on this 4-hour chart's down here, okay? And basically it spikes it a little bit. It doesn't really break it. But on the daily it broke, right? So I must, let's see if we can find that daily. So high, low, lower high. It's probably here. That was probably the daily that we were looking at. Oops. Actually, we had 161.25, 159. This is definitely one of them. I think this was the other point, but I should have just marked it. But anyway, let's just moving forward. Okay, so we got a break point in the market. Let's say right there. All right, a lower, or let's go here. Let's go. Here's the lower low. Right there. So we got a low, we got a high, higher low, lower high, higher low, lower high, deeper low, lower high. Oh, actually, it's this point down here. There's the break point. Okay. So the marketplace actually reacts off of it quite nicely. It's making a high, coming down, it spikes down here. Okay, but let's say, for instance, we wanted to use the fib tool retracement, the trend-based fib extension tool in this area. How do we do it? Well, there are certain ratios that you can use, and there's more than these two, okay? And I'm going to be going over it in my Fibonacci course, like deep course, and also I'm going to be doing some, giving some, triggering systems, basically trading systems to trade it, get long, short, with stops and things like that. I think it's going to be really cool. So the first thing we have to do is we have to qualify this high. So what do I mean by qualify the high? If I take the high of 166.31 and I multiply by a ratio of 0.9944, I come up with a price point of 165.37. So I'm just going to throw that up, 165, right there, close enough, 165.35. A break of that price means that this is a qualified high. So in other words, what I'm saying is this, that if the marketplace was still continuing upward, it should not have broken this price. It should not have basically spiked really through here, and it should have come down, touched it, maybe went through a little bit, but then continued high and take this high out. That would mean that the marketplace is bid, and most likely it's going probably back to maybe this high bar. This bar's closed right here, 167.07 would be the first level of resistance, but it does break this. So if I take this 165.39, 165.39 times 0.9944, I get a secondary point at 164.46. And look how the marketplace stays. I didn't make this up. I always do this stuff on the fly. But look how it sits between these 2 points before finally we get a breakdown. So what we're knowing that right now is this is a qualified high to get my first point off of. Market keeps trending down, trending down, trending down. And let's get rid of this. Well, how do I know where a potential reversal point is, or where the next point to the starting point, then the swing low for a bullish point, and then back up? All right. So if I look at this low right here, 161.86, and I multiply by that second ratio I gave you, 1.0056, it's got to get above 162.76. So where's 162.76? Let's just move this down. right there. It does get above 162.76. So, however, it breaks immediately. It does not hold. It does not hold. It goes up through it. It goes to 163.21, not much higher. Now, here's the other thing that we can do. We could take this point right here, 162.76, and multiply by 1.0056 again. Next resistance, 163.67. Right there. Doesn't do it at all. Just basically creeps up, comes back down. Now, if we were using the tool, if we say, oh, wow, we broke this, we could definitely use the tool here. So hang on a second. What we could do is, it would be wrong, but what we could do, because we'd have to readjust it, is we could take our extension tool and go from high, okay, to low, and actually up to, we could all go up to maybe this high right here, okay, because that's the second iteration of the calculation, the 163.66, and you can see the marketplace basically comes and it breaks and goes lower. Okay, but let's just continue with our experiment here. So the marketplace came up through that 1.0056 point, can't get above 2x, comes back down and hits this low right here. Well, we'd be doing the same exact thing. We'd be taking the 160, the figure, multiplied by 1.0056, and we get 160.89. So I'm just going to take this. I'm going to come down here. $160.89. What's that times 2? Times 1.0056. Next level, 161.79. Right there. So this is the first 1.0056 multiplied by the low, and this is this level, 168, multiplied by 1.0 gets me there. So now we know that we have found, okay, or potentially found, because you never know. I mean, markets can reverse, but it's a good indication that, okay, we got our points. So here's our trend-based fib extension. We can go this high to this low to this recent high right there. Oops. Okay, I'll fix it in a second. So those are your proper points. Now notice how it rides the 0.382, and now and then it breaks. Once it breaks the top, which becomes what I call the ice line. This is the marketplace basically saying, okay, we're going up, and where are we going? Most likely we're going to the high bars close, which is 166.12. I don't know what we made it to. 166 the figure, so pretty close before the marketplace came off again. But that is how you find the proper points to basically put your tool. So you're using ratios. You're using specific ratios. 0.9944 off the top. Now do this. Now here's your homework. Go and find a top. Pick any random top you want. And say, okay, if I take 0.9944, multiply that by 0.994, the break should signify market should be going lower. If it holds that level, if it plays around that level, and then it takes that top out, the marketplace is going higher. Same thing at a bottom. Go to a bottom. Go, okay, I got a bottom here, multiply by 1.0056. Okay, I broke that level. What's the next level? That level multiplied by 1.0056. Okay, now the market's bullish, okay? So you can then pick your points and have your retracement levels that you can get involved with the trend. That's what the trend-based fib extension tool is really best for, but nobody knows the ratios. Nobody talks about the ratios because the ratios were proprietary and now I'm revealing them to you. So don't tell anybody about them. All right. Anyway, look forward to seeing you in the next video. And remember, always enjoy the party, but dance near the door. Cheers.